First of all, I strongly believe that my voice is very much clear. And the second, everyone can see this question. And this class is going to be, trust me, very important. Very important means very important. Layout question, that this question came in September, December 2024. So obviously latest, no doubt about it. Requirement 1 and 2 will be discussing on one, I would say one note. Even the last requirement and first we'll be discussing on one note, but after that I'll show you how to actually solve this last requirement on CB platform. How to deal with the pre-populated, let's say SFP PNL. So this class is going to be extremely important. Even those they will be watching or they are watching on recording. So please take this class very seriously. So let's read the requirements. It's a 30 marks question, but normally in a 30 marks question, you will not have each and everything about consolidation. You should be expecting something else other than consolidation as well. The examiner could ask any other IAS, IFRS within that in the context of consolidation. So let's see, requirement A. Using exhibit 1. Okay, when your examiner says using exhibit 1, it means while reading the question, try to stick with the exhibit 1. There's no need to read exhibit 2, 3. You'll be just wasting your time. Using exhibit 1 and in accordance with IFRS 10. So examiner is very specific. Use exhibit 1, then go for IFRS 10, consolidation financial statement. Explain why layout does not control Brasioc company as at December X8 8 marks, X7 8 marks. Examiner is specifically asking us on this date. On this date, why layout does not control Brasioc company. Obviously, you're not supposed to directly answer that in a one-line answer that this is the reason it is not controlling. No. First, IFRS 10, you should be giving the reference of IFRS 10 regarding control. There should be first at least little bit discussion which should show you knowledge about the control. Like if you recall IFRS 10 and regarding control, number one is how do we check control? Either one company is having control in another company or not. Number one, we have to see the power over the investee. How do we check power over the investee? Simply through voting rights, through ordinary shares. Normally, if you have, for example, more than 50% holding, so normally we assume you have got control, but it is not necessary. In order to get control, always you have more than 50% holding. So number one is power over the investee. There's a second point as well in IFRS 10. That is exposure right to variable return from the involvement in investee. Obviously, when investor will be involved in investee's business, so the return, they will be affected, what investee is going to generate. And the last one is the ability to use this power. If I have, for example, 30-40% holding, 50-60% holding, it means I have the ability to use my power in the relevant direct activities of investee. What do you mean by relevant direct activities of investee? Like I can deal in the, I'll be participating in my investees, let's say operating policies, financing, and let's say investing policies. If I can participate and due to my participation, what return that investee is generated, it will be affected. Ultimately, I am also exposed to the, let's say, variability in the return. Why? For example, if in an XYZ company, I've got 40% holding and due to my involvement, let's assume the profitability goes high in the investee's business, in investee's company. So obviously I'll be getting the benefit also. But due to my involvement, if something goes wrong and the profitability declines, so I will have to face that as well. Okay, another thing is, for example, we'll be reading the scenario as well. One more thing. If after reading the scenario, if it is still not clear which company is the parent and why the XYZ company is not parent, then you have to check which company is providing the consideration. Normally, parent is the one to get the control, they will provide consideration. Now let's read part A, and let me tell you, the entire answer of part A you have to type on MS Word. Only look at this adjusted pre-populated spreadsheet. The last requirement you will be solving on a spreadsheet. Other than that, A and B you should be solving on MS Word. Now let's read the scenario. Try to take out eight sharp, short, solid points. If you can't do that, then at least try to find out four. I would say four little bit large points. That means 1 point you should be explaining then around in 3 lines. If you can do that, then stick to the 4 points. If you are really good enough and you can just write in a sharp, short sentences, then try to find out 8 points, but it is not necessary. For 8 marks, you should find out always 8 points. Even you can find out 6 to 7 points, is still good enough. What should be the first point? Even without reading the scenario, the first point should be the definition of the control. There are 3 points in IFRS 10, and I think I've told you guys as well. At least, I hope everyone is having SBR short notes as well. At least try to memorize whatever is written in the short notes. That will give you seriously 40% marks. You can just easily take it first understanding and then just by memorizing the short notes. So just first write the definition of control. How do we determine control under IFRS 10? Number one is power over the investee. The second point, if you recall, is exposure or right to variable returns from involvement with the investee. And the last one is the ability to use its power over the investee to affect amount of those return. Okay, now let's read. Exhibit 1, Exhibit 1, Exhibit 1. And we just need to find out why layout does not control this Brasco company. On January X7, layout acquired 45% ordinary share capital in Brasco. Now, let me tell you, I'm telling you 2 points. Number one, I've given you the definition of the control under IFRS. Then you should be writing the second point. The second point is you simply write that normally when investors, normally when investor is having more than 50% holding, it is assumed that investor is having control. First point was a definition of the control. The second point is normally when investor is having more than 50% holding in a company, then it is assumed that investor is having control. So far 2 points. Then third point. In third point, we'll be explaining that it is not necessary that always in parent will have more than 50% holding to get control. Because voting right is not the only criteria to find out either investor is having the control or not. Now we are also explaining our examiner just voting rights, just holding. Only holding does not determine that who has the control. Now let's try to read the scenario now. On January X7, layout acquired 45% of the equity share capital in Brasco company, a private company. Point 5 of Brasco company's executive directors. How many? 5. And 4 of Brasco non-executive directors. Non-executive, we can appoint 5 executive and 4 non-executive. Let's see how many are there altogether. There are 12 executive directors. Stop. 12. Out of 12 executive, we can appoint 5. and 7 non-executive director which come 7 non-executive. Now listen, there are non-executive 7. Out of 7 non-executive, we can appoint 4. Now try to understand. When it comes to executive director, layout cannot appoint majority of the executive directors, but layout can hire majority of non-executive directors, which comprise Briscoe's company's BOD. Okay. The executive directors make all key business decisions by simple majority. Stop. Who makes the decision? Majority. Simply majority of the executive directors, they make the decision. We are not supposed to appoint majority of executive directors. The non-executive director help in the strategic development of the company and provide advice to the executive director, but cannot vote. First of all, we have highlighted 3 points. One was a definition of a control. Second, we discussed when investor is having more than investor has got control. Third, we said it is not necessary always to get the control holding must be more than 50%. You can say sometime less than 50% with other, including with other factors, there's a possibility of getting a control as well. Now let's go for the application. In applying, now you will take the scenario, you will take the information from the scenario. First of all, from the scenario, we'll say that layout is having a 45% holding. Then, due to this 45% holding, layout cannot appoint majority of the executive directors, and in order to make decisions in Briscoe's company, majority of executive directors are required. Even though layout can appoint majority of non-executive directors, can I say, but they are irrelevant. Why they are irrelevant? They are not directly involved in key decision making. They can just they are there to just facilitate executive directors. So right now it is very much clear on this basis that layout cannot appoint majority of executive directors. Okay, you have to mention this. And majority of executive directors are required to make key decisions. So that is why simply right now we are saying on this basis we are saying layout does not have a control, even though layout can appoint majority of non-executive directors, but that is irrelevant. Now let's read more. The directors appointed by layout always vote in line with the layout policies. That's understood. The other 55% of shares are owned by a single private investor who appoint remaining 7 executive directors and 3 non-executive. Now stop. One more reason why layout does not have a control. Try to understand. Layout is having 45% holding. And there's one private investor who is having the holding 55%. So there is one more reason why layout does not have a control. We will more explain to our examiner that layout is having 45% holding in this Briscoe company, and remaining 55% holding is not with the disbursed shareholders. It's not with the disbursed shareholders. The remaining 55% holding is with a single investor. That is also in the indication that layout does not have the control. If you recall the normal classes in which we have discussed while discussing IFRS 10, that there's a possibility you are having 45% holding, but the remaining 55% holding is with the disbursed shareholders and they cannot be gathered in any AGM. They are disbursed and nobody is having more than even 1% holding. In that case, we say, okay, even you have less than 50% holding, still you are the one who has control. But this is not the scenario here also. This is another reason, one more reason why we are saying that layout does not have a control. That is, layout does have a 45% holding, but the remaining 55% holding is not with the disbursed shareholders. That is also in the indication layout does not have control in this Bryso company. Okay. What else? During their ended December X7, fractional 10% of equity capital of Brasco in October X8. So don't forget, we have to explain our examiner why December X7 we do not have the control. Layout company entered into a forward contract to purchase additional 10%, but not on December X7. You will be buying on October X8. When exercised, this will not change the number of directors which layout. Oh, wow, 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 wow. What is this? When exercised, this will not change the number of directors which layout can appoint. Students, number one, you will be mentioning that right now layout does have a 45% holding, number one. Number two, another very interesting point, layout, of course, can buy additional 10% equity in this company, but layout cannot buy that additional 10% equity in that company. When is going to layout buy this? If layout want to buy, can I say layout is, if layout is going to buy, they will be buying in October exit. They are not buying it today. So simply right now on December X7, we will say that layout does not have the control at all. Student, is that clear? Yes or no? How many points we have highlighted? Let me give you an number one, definition of the control. Number 2 point, normally when investor is having more than 50% holding in investee, then we assume investor has got control. Third point, it is not necessary to get control, always have more than 50% holding. Sometimes even the holding is less than 50%, but including with other factors, there's a possibility investor is having control. Then fourth point, layout cannot appoint majority of the executive directors. There are 12 executive directors. Out of 12, layout can only appoint 5. And majority of executive directors are required in order to make key decision in Brasco company. Simply that is why we are saying right now, layout does not have a control. Another point, layout can appoint majority of non-executive directors, but non-executive directors are not the one to make key business decision in the Brasco company. That is why appointing majority of non-executive is irrelevant. So that point also. Point number 6, layout has 45% holding in Brasco, but the remaining 55% is not with the disbursed shareholders. The remaining 55% holding is with a single investor. That is also the indication that layout does not have control. Another point, layout can acquire additional 10% equity in Brasco, but they are not acquiring it on this at December X7. They will be, if they acquire, they will acquire after. They will acquire, but they will acquire after December X7. So they're not acquiring at December X7. So by looking all these points, so we are deciding that simply layout does not have control in Brasco company. So I think if you can highlight around 6 to 7 points, even while sitting in exam, you can highlight 5 points. That is good enough. Is that clear to everyone, students? Kindly reply. But again, you will be getting more benefit if you have already completed consolidation lectures from our pre-recorded classes. Okay, let's see the reply from the students. Okay, that's great. So students, I've given you the proper, I would say, planner for part A. All you need is just write in your own wordings, and after writing in your own wordings, then you can check the examiner answer. Read it only once, but please do not get demotivated by looking at the volume which examiner produces. Nobody expects the same volume from you guys. Nobody is expecting. You are a student, and that person who has written the answer in the kit, or let's say past paper, that person is your examiner. So basically, we are not asking this 100% same quality and quantity from you. As far as you are logical, you will get marks. But if you're writing something which is not in IFRS, obviously there's no negative marking, but you will not get any mark. Now let's go for, but I'm very surprised why students are not here. Majority is not here. Part B student will stick to Exhibit 2. Using Exhibit 2, explain with appropriate calculations. So they're not asking only explanation. They also need appropriate calculations. How the defined benefit plan IS 19 should be accounted for in the year ended December X7, 8 marks. Using Exhibit 2, explain with appropriate calculation how the defined benefit plan. Okay, now, again, if you have seen, obviously you should have seen IS 19. If you recall in IS 19, one format is very important. I'll take opening pension liability. Opening, let's say if opening I have a pension liability, whatever it is. If it is net pension liability rather than asset, then due to unwinding of discount, this liability will increase. Add finance cost. And discount rate will be the interest rate of corporate bond. Examiner will give you. Whatever it is. We'll add this. Then add service cost component. Now listen carefully. What comes in service cost component? Current service cost comes in the service cost component. Past service cost is a part of service cost component. There's a possibility of curtailment and settlement. Actually, if there's a gain or loss on curtailment or settlement, that is also a past service cost. So what exactly comes in service, I would say, cost component? Current service cost component, and examiner can give you the past service cost. That will also be a part of service cost component. Sometimes examiner does not directly give us past service cost. Instead of that, examiner gives us curtailment and settlement. If there's a gain on curtailment and settlement, then logically your service cost component will reduce. For example, we are taking some of the employees out of the benefit plan and we are paying them, for example, 10 million. But pension liability is reduced by 12. If this is happening, that we are paying 10, but the liability reduced by 12, then there's a benefit of 2. On settlement, you can say that there's a benefit of 2. This benefit will actually reduce your service cost component. But there's a possibility that we are taking out some of the employees out of the benefit plan, but the 10, but so if there's a loss on curtailment and settlement, it will increase your service cost component. If there's a gain, it will reduce your service cost component. Now, what else? Very important. Contribution paid. Logically, contribution paid will reduce your pension liability. What contribution paid actually does? contribution paid actually increases your plan assets. Of course, when plan assets will increase, then pension liability will reduce. So simply I will deduct contribution paid. Repeat. What contribution paid does, let me repeat, actually contribution paid increases plan assets. And obviously when plan assets will increase, then your pension liability will reduce. Assuming if I net off all of them, I'm getting 1000. Closing pension liability value, practically actuarian will give you. Assuming closing, I'm just assuming, okay? Assuming closing pension liability, I'm assuming is 1100. If this is the case, then logically remeasurement components technically an actuarial loss. This 100, which is a balancing figure, is a remeasurement component. Number one, remeasurement component we recognize immediately in OCI. Number two, this will not be recycled to P&L. And logically, this 100, according to my calculation, the liability should have been 1000, but it is 1100. So liability increased by 100. If the liability increases by 100, then technically it is an actuarial loss. Another possibility, let's say according to our calculation, the liability should have been 1000, but examiner gives you the closing liability 800, I'm assuming. If this is the case, pension liability, then logically remeasurement component is negative 200, and this will again recognize an OCI, but technically now it is actuarial gain because the liability is being reduced rather than increase. So actually, number one, you should be very, very good in this, I would say, format. And then one more thing. Don't forget IFRS 18. How IFRS 18 affects, I have conducted during live revision classes, student, I have mentioned. Whenever you will be writing anything that this transaction is affecting the P&L, now you have to mention which section of the P&L. For example, finance cost. If someone is writing that finance cost will affect P&L, you will be getting 0 marks in SBR. Logically, you will be writing that finance cost obviously will impact P&L, but in statement of P&L, finance cost will be shown in financing activities. Service cost component we will show in operations, operating category. Contribution paid is not impacting the P&L. What is contribution paid actually doing? Let me repeat. Contribution paid is actually increases plan asset, and due to increase in plan asset, your liability will reduce. Service cost component, operating category. Finance cost is financing category. Student, you have to mention things like that. If you're not mentioning, you will be losing marks. Now let's read the requirement again, part B. Using Exhibit 2, explain with appropriate calculations how the defined benefit plan should be accounted for in the year ended December X7, 8 marks. Now let's read the question. Exhibit 2, okay, calculator. Okay. Is here. January X7, the defined benefit pension plan of layout had a net deficit for 24 million. Stop. Net deficit is representing pension liability. Logically, it is your pension, opening pension liability. The actuary has provided the following information for the year ended December X7. We have got service cost, current service cost, cash contribution net deficit, Okay, just a minute. What exactly they are doing it? Net deficit December X7 is 32. January X7, the interest rate on high quality corporate bond is 5%. Now just listen here. Logically, opening pension liability is 24 and net interest component will increase your liability. Net interest component 5%, 1.2. This will increase your liability. Okay. What else? Cash contribution will reduce my liability. I know that. At December X7, the pension plan extinguished its obligation to 250 ex-employees. So from this pension plan, let's say we simply paid to 250 employees. We took them out of this pension plan. The pension plan is closed for them. We paid them, okay? Paying them how much? 60 million out of its plan assets to another pension provider. This reduces the present value of plan obligation by 50. Now, student, look at this. I can see there's a loss of 10 million. Why loss? I am paying 60, but my liability is being reduced by 50. So logically, there's a loss on curtailment and settlement. You can say that it's simply another term for that. You can use a past service cost. Loss on curtailment and settlement will increase your current service cost. It will actually increase your liability. It is past service cost. Because we are paying 60, but the liability is being reduced by only 50. What else we have? After the above events, the actuary valued the net deficit instead of 32. Now actuary says it is 40. So this 40 works as closing pension liability, closing pension obligation. The only accounting entry in respect of this pension plan was to recognize the cash contribution as an expense in operating section of the statement of P&L. Absolutely incorrect. Now, student, listen the explanation nicely, okay? Because only the calculation is not required. First of all, you will explain to your examiner that January X7 net deficit of 24 million is actually representing opening pension liability. Then, due to net interest component, which actually represents time value of money, pension liability will increase. So the pension liability will increase by 1.2. Number one. Number two, you will have to just explain your examiner this 1.2 will impact in a statement of P&L the financing category. So 1.2 we will show in P&L, but where? In financing category. After that, you have to explain that there is a loss on curtailment and settlement because payment was made 60 million, liability is reduced by 50 due to that loss on settlement. Current service cost will actually increase. It's not only current service cost will only increase, your pension liability will also increase. It means at service cost component 6 plus that loss. And you have to mention one more thing, that entire 16 service cost component we have to show in P&L under operating category. Okay. After that, what they have done? Cash contribution 4. They have taken that as an expense to the operating section. Now listen carefully. After that, we'll explain that cash contribution into the plan will actually increase. It increases the plan asset, reduces the pension liability. It is not an expense. Repeat. Contribution of 4 million actually increases the plan asset, reduces the pension liability. It is not an expense. So less pension contribution, which is 4. So logically, this 4 million increases your pension plan as your plan assets, reduces your liability. It is not your expense. Okay, so this 4 will be removed from the operating expenses from the operating category. Now, let's see, according to our calculation, what should be our liability? 24 plus 1.2 plus 16 minus 4. Students, I'm having 37.2. Examiner has given us the net deficit. Actually, he has actually given us at December X 740. So you can see that according to our calculation, the liability should have been 37.2 million, but actually says no. Actuarian says no, it is 40. There's a rise in the liability. It means remeasurement component technically is a loss. Number one, you will explain your examiner. Remeasurement component is recognized immediately in OCI under the category the item which will not be recycled to PNL. And logically, difference of 37.2 and 40 is a actuarial loss. Remeasurement component. So student, I'm just repeating for you explanation part. First point which you should be explaining your examiner, that net deficit at January X 724 is the opening pension liability. Second, this pension liability will increase due to time value of money impact by using corporate bond rate, which is 5%. Then another explanation, this 1.2 will be shown in financing category, financing section in the P&L. Third, there's a loss on settlement because the payment is payment was 60, the reduction in the liability is 50. So that 10 is will increase the loss on settlement will increase your service cost component. That will increase the liability as well as it increases the service cost component, and entire 16 in the P&L we have to show in operating section. Then you will have to explain contribution to pension plan is number one, it's not an expense. Number two, what contribution to the plan does, it actually increases plan asset, reduces pension liability. Then you will say to your examiner that according to our calculation, liability should have been 37.2, but actuarian has given us 40. So remeasurement component 2.8, which is a balancing figure. But you will also explain technically this 2.8 is an actuarial loss, which will be recognized in OCI under the category which will not be recycled to P&L. I hope the entire explanation with the number is clear to everyone. Kindly reply, students. I'm waiting. First, I'll be explaining you the consolidation part on this one note. Then we'll go to the ACCA CBE platform. Then we'll see how to perform that calculation on the actual CB platform, so that you should get the first-hand knowledge. Okay, that's great. It's clear. Okay. Okay, sir. Great. Now let's see. So in part C, using exhibit 2 and 3, which we have done. No, we have done only 2. Adjust the pre-populated spreadsheet response option to correct the draft consolidated statement, means it's not fully completed. Adjustments are required. Draft consolidated statement of financial position as at December X7 for the following fact. Bryso company is an associate. Come on. It's not your subsidiary, it is your in associate student. If you recall, we follow equity accounting. Yes or no? In equity method, what do? We simply take cost of investment. Within that cost of investment student, we simply add share and post reserves. Okay. If the dividend is coming from associate, we deduct that. If there is any impairment loss in associate, then we deduct that as well. So Bryso company is an associate, not subsidiary for layout company, and defined benefit pension plan has not been correctly accounted for. So they have not accounted for pension plan. So we have to account for. Now let's go for the third one. Exhibit 3. Exhibit 2 we have already done. Okay. Acquisition of Bryso company. January X7 start of the layout acquired 45% of $10 million $1 equity share of Bryso. Now stop. 10 million their numbers. Par value is 1. It means share capital of Bryso is $10 million. This gave layout significant influence over Bryso company. However, the investment was incorrectly classified as a subsidiary and accounted for using acquisition method in consolidated financial statement. Now stop. Student, listen to me carefully. Actually, this Bryso company is your associate, but by mistake, instead of taking this company as an associate, by mistake, parent has taken this company as subsidiary, number 1. Number 2, they have prepared the consolidated SOFP as well. So can I say, student, first, I have to remove all the impact of subsidiary from the group accounts. Why? Because this company is not your subsidiary. This company is actually your associate. Step 1, I'll be removing all the impact. Means, for example, how do we do the consolidation? We normally, of course, calculate goodwill. Okay. If it is a positive goodwill, fine. If it's a negative goodwill, gain on bargain purchase. So I will eliminate the impact of that goodwill. Then, of course, we add all the assets of property, plant and equipment, all current and non-current asset of subsidiaries with the parent. I will eliminate all the assets. I will eliminate all the liabilities from the group accounts. Even what do? While doing the consolidation, we take share in the post-acquisition reserves of parent or post-acquisition reserves of subsidiary. I will eliminate that as well. So first, we have to remove all the impact of subsidiary, and then of course we'll have to do the accounting of an associate. Is that clear, student? What exactly we need to do here? Please reply. I'm waiting, students. What exactly we need to do? Is that clear? Please reply. Students. Okay, that's great. Okay, great. Now let's come in. When calculating goodwill on January X7, the non-controlling interest was measured at fair value, 51, it means full goodwill. Fair value intangible net asset acquired was 83. The purchase consideration comprised cash 35. Now stop. Let me just show you working one. Then obviously we'll go to proper CB platform as well. If I just show you the goodwill calculation. Cost of investment. Okay. The purchase consideration comprise cash 35 and the fair value of NCA is 51. 35. Fair value of NCA 51, I'll get 86 less fair value of net assets at acquisition. They have given us 83. If there is no impairment, nothing, then goodwill is 3. And this 3 we need to remove while correcting the pre-populated SOFP. Is that clear to everyone? Please reply. Students, I'm waiting. Let's see. Okay. January X7, Brasso company had a retained earning. January X7 is the acquisition date. Brasso company had retained earning 39 million. It means opening retained earning. And other component of equity 3 million. OC also in January X7. Incorrect subsidies having retained earning 39, OC 3. The difference between the fair value of the net asset and the carrying amount in the individual financial statement was attributable to property, plant, and equipment with the remaining useful life of 5 years at the acquisition date. Now, student, listen. At acquisition, examiner has given us the fair value of net assets, which is 83 million. Within this 83 million, there is a fair value adjustment. Number one, that fair value adjustment relates to property, plant, and equipment, and it's a depreciable asset. And we know that when we do consolidation with our subsidiary, of course, if there is any depreciable asset fair value adjustment, we do increase our non-current asset, but due to depreciation, those non-current asset will also be decreased. Okay. Now let us first find out the fair value adjustment. Working to I want to find out fair value adjustment, which actually relates to property, plant, and equipment. Net assets at acquisition 83 million. We know that net assets, they are equal to actually equity less share capital of subsidiary. Share capital, they have given us 10. Retain earning at acquisition, they have given us 39. OCE at acquisition, which is 3. So the balancing figure is fair value adjustment. Now let me use a calculator. 83 minus 10 minus 39. 83 minus 10 minus 39 minus 3. Students, I'm getting fair value adjustment 31. The story does not end at 31. It has a remaining life 5 years. So obviously additional depreciation also. Just a minute. The individual statement of financial position of Brasco, this is individual books of my incorrect subsidiary. In individual books, we have property, plant, and equipment 32. So of course, while doing the consolidation, I would have added this 32. Technically, this 32 is already added in the group accounts with the fair value adjustment. So it means that, look at this. Property, plant, and equipment. Individual books of B company 32. They will increase due to fair value adjustment. Property, plant, and equipment 31. Due to additional depreciation, it will be reduced. Less additional depreciation on fair value adjustment. 31 divided by 5. I'm getting 6.2. 52 plus 31 minus 6.2. Student, I'm getting 56.8. Now listen to me carefully. In group SOFP, in the non-current asset in property, plant and equipment, the net impact of property, plant and equipment is 56.8, which we have to remove. Why we have to remove? 56.8 will come to your group, should be included in your group SOFP if it is your subsidiary. But this company is not your subsidiary, it is your associate. By mistake, you have treated this as an associate, as a subsidiary. So it means within the group SOFP, the impact of 56.8 is already included. We have to exclude. What exactly we are doing? Examiner by mistake treated an associate as a subsidiary. So we are eliminating all the impact of subsidiary from the group SOFP. So we have to eliminate this 56.8 from the non-current asset of group accounts. Is that clear to everyone, students? Please kindly reply. Students, please reply. Okay. Now, of course, in post-acquisition reserves of subsidiary, we have included impact. We have taken the impact for the retained earning as well as NCA. So let's see what happened in the post-acquisition reserves. Come here. The retained earning at acquisition is 39. This is individual SOFP of my incorrect subsidiary is 55. Look at one thing. OC at acquisition was 3. At reporting date, it is also 3. So there is no change in OC. So in the post-acquisition, only retained earning has changed, but no change in OC. So post-acquisition retained earnings. Working for post-acquisition retained earnings. Retained earning at reporting date. Examiner has given us subsidies retained earning at reporting date 55. Logically, this 55 is reduced will be reduced. Obviously, it is reduced due to this additional depreciation on fair value adjustment. So 55 minus 6.2 gives me 48.8 less retained earning at acquisition, which is 39 if I'm not wrong. So I'm in the post acquisition, I'm getting 98. And entire 98 does not belong to parent, of course. 9.8. Can I say 45%? By mistake, parent has taken. And 55 again. 55% we have given to NCI. Again, we have to eliminate group share and NCI share. It is coming 4.41. Let's take it 4.4. NCI share. We have to again eliminate this. So we have to eliminate the share of group as well NCI. Now we have to also calculate the value of NCI because we have to eliminate that as well. So working number 5. NCI at reporting date. First of all, NCI at acquisition, they have given us 51 if I'm not wrong. NCI at acquisition Then simply we'll add 5.4. There's no other information. NCI share which I'm getting from working 4. So we will eliminate from NCI this 56.4. Anything else? Let's see. Nothing at all. Now, student, the main question is how to deal with in a, I would say, pre-populated SOFP, which comes in a, oh, calculator is gone. Just a minute. Let me first share that CB platform so that you can get a really good idea how to deal with part C. CB platform is here. Great. Student, first of all, I hope everyone can see this. Yes or no, please reply. Or only I can see this CB platform. Students. Okay, everyone can see. That's great. Is there anyone else? Okay. Let me show you Exhibit 3. On January X7, Layout acquired 45% of 10 million. $1 equity share of Brasco. This gave Layout significant influence over Brasco company. However, the investment was incorrectly classified as a subsidiary and accounted for using what? Acquisition method. And we know that it is mentioned in the requirement. It is not your subsidiary. It is actually your associate. Am I right? The non-controlling interest at acquisition is 51. Then fair value identifiable net asset 83. The purchase consideration comprised 35. On January X7, Brasco company had retained earning 39, OCE 3. Okay, so let us first calculate goodwill. That is going to be working 1 if I'm not wrong. Just a minute. Bring this in the front. Okay. Students working 1, working. This is, see, working, they are starting from here. Always start working from the end of pre-populated SOFP, from the end of SOCI. Okay. Don't go on your right side, you will stack up. We never know how many adjustments we have to deal with. So I would say pre-populated SOFP. An examiner has given us working 1. And let me tell you one thing. Student, the CB platform, the actual CB platform as well, and this, it does not work as fast as your normal Excel works at home. So you have to have a little bit patience as well. Okay. And I hope you are not using it first time. So you should be having a little bit idea. Goodwill. Cost of investment. I'm just writing here. I think it was 35. Fair value of NCI 51. Less fair value of net assets at acquisition. They have given us 83 if I'm not wrong. So with the negative sign 83. This will give us goodwill. What happened to the goodwill? 86 plus this. I hope the working of goodwill is clear to everyone, students. There shouldn't be any problem at all. Now, how I'm going to deal with this? Now, just a minute. Come here. What is this? What is this? Come here, come here. Can you see? I'm making the first adjustment here. I'm just giving the heading. The heading is remove subsidiary. So we have to remove the impact of subsidiary. Is that clear to everyone? Remove subsidiary. Is that clear? Yes, no, please reply, students. Now, goodwill. I hope that I can adjust this. I'm giving the reference of working one. Great. This, can I say -3? Please, student, reply. Due to this subsidy, we are having a goodwill of only 3 million, so that 3 will be eliminated. Kindly reply yes or no, please. Or we can do this as well if this is disturbing us. If you want, you can make it a little bit short. It's up to you. Student, is that clear that we are eliminating this 3? Students, I'm waiting. Okay, thank you. Now, student, let us go and working 2. I'm doing working 2 here. In working 2, actually, we have to find out number 1, fair value adjustment. And plus, we have to find out the value of property, plant, and equipment, which needs to be eliminated. Fair value adjustment. Let's deal with this first. Fair value of net assets at acquisition. Examiner has given us 83 less share capital. It was 10 less retained earning at acquisition. Retained earning at acquisition, it was 39 less OCE at acquisition. OCE at acquisition. It was 3. So we'll get fair value adjustment, which actually relates to property, plant, and equipment. Let me use the sum formula. Sum formula is given to you in exam. So we're getting fair value adjustment 31. Now within this, let's deal here. And I'm writing PP to remove subsidiary. Can I say less additional depreciation on fair value. $31 divided by 5. Add PP of, what is the name of the company? BRASSIOC Co. We have to see the value. 32. So here comes the amount of property, plant and equipment which we need to actually eliminate from the group SOFP 31. This plus this. Student 56.8. We have to eliminate 56.8 from property, plant and equipment. So let's go to the column which we have started. Property, plant and equipment here. Working to it is 56.8. Am I right? We can do one more thing. Let's see. Is equal to. Let me check. We should be able to generate the link as well. Great. Let's check also. Yes. If you can generate the link, so that is, I think, advisable. The benefit is, of course, when examiner is going to check, examiner will click this property, plant and equipment. There's a reference of working to. Plus, if I really want to see directly how did you get this 56.8, if I select 56.8, it also gives me the address from where I'm getting this 56.8. So if you can generate the link, then you have to give the reference of the working plus generate the link. Is that clear, students? But obviously where I cannot generate the link, then just give the reference of the working. Okay. Now let's come here. Student, in the first paragraph, the last line, the purchase consideration comprise cash 35 million. Now listen to me carefully. It is our associate number 1. Number 2, by mistake, examiner has treated this company as subsidiary. Actually, it is not an subsidiary, it is your associate. So we know one thing. Cost of investment in subsidiary, we do investment in associate. We have to show parents investment in associate number 1, cost of investment, and within that cost of investment, we do add share in post reserves. So what I'm doing, look at this. Investment in associate, let's see. Do we have in working 1? Okay, later on. Actually, we have to perform the working for investment in associate as well. So I'll show you that. So far, we have removed the impact of property, plant and equipment. Am I right? So let's come to the question. Now, students, we have to see. I think we have already done the working, if I'm not wrong, but obviously not here. which is impact of retained earning. So working 3 is going to be here. No. Working 3, post-acquisition retained earnings. If you recall, subsidies retained earning, they've given us how much? We have to see. Reporting date, student, you can see that it is 55. From this 55, we have to deduct additional depreciation on fair value adjustment. So simply, just a minute. Retain earnings at reporting date. Retain earnings of the name of the company is very different name. I have to see what is the name of the brand. Okay. BRASSIOC Co. It is 55 less additional depreciation on fair value adjustment. Student, I'm creating the link. I will less retain earnings at acquisition. 39, if I'm not wrong, that will give us post acquisition. $9.8 group share was 45%. Oh no. Group share is 45%. NCI share. And student, we have to eliminate this group share as well. Yes or no? Now let us do one more calculation of NCI. That is very easy. Then we will be dealing with adjustments. Working 4. Non-controlling interest. NCI at acquisition. They have given us 51 if I'm not wrong. Add NCI share in post acquisition retain earnings. Let me create the link. NCI. Now students, things are very easy. Now come here. Okay. Investment in associate. Let me just show you. The student, when parent makes investment in subsidy, of course, that is not shown in the group SOFP, but parent will have to show their investment in associate. Is that clear? Yes or no? Please reply. Okay, I'll show that in another column. Current assets. Come here. What is the value of current asset of subsidy? Can you see this 47 students in the question? We have to eliminate this 47. I hope you can see that. Yes or no, please. Then what else? Right now we are working on removing subsidy. Retain earning. Student, we have to give the reference of the working as well. Which was this? Retain earning was working 4 if I'm not wrong. Okay. Working 4. Now let me create the link. We have to eliminate with a negative sign. Group share. Group share, group share, group share, group share. 4.41. Okay. NCI students, we have to eliminate NCI. Working reference. I have to give the reference of the working as well. Okay, don't worry. First, let me eliminate this. NCI, 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 NCI. Now, let me give the reference. NCI, I believe it is also coming from working 4. Okay. Now, current liabilities. Let's check subsidies liability information. Student, when it comes to liabilities, we have got only 11, nothing else. So current liabilities, we have to eliminate 11. So students, as far as removing subsidies impact is concerned, I have shown you all the impact. Yes or no, please reply, students. We have taken all, this 56.5 has to be negative. Why? Because we are removing it. We are removing it, that is why. Okay. Now, student, listen carefully. Now we have to deal with associate. How to deal with associate? By using equity method. So let me show you. Investment in associate. So we can do one thing. I'm using these two columns. Cost of investment in subsidy we show, but cost of investment in associate we do show. That has to be positive, which is 35. Then we have associates profit. So will I be able to use this? Share in associate profit. If you recall group share, which we took 4 point something, it is actually the 45% is not group share, it is the share of profit in associate. Now it has to be positive, it will not be negative, okay? Where is that? You can do one thing. I want to give the reference here. Share and associate profit, it was working for. I hope so. Let's check also. No, it was working 3. Do the correction. Working 3. Now, student, listen. The double entry of this 4.4 is investment and associate debit and retain earning credit. With this 4.4, group retain earning will also increase. With this 4.4, your group retain earning will also increase. The double entry of this 4.41 is investment and associate debit, retain earnings credit. Okay. Now, students, we have to deal with the pension as well because it is mentioned in the question. We have to deal with 2 adjustments because they have not dealt with the pension. We have to deal with the pension. For the pension, if I just take you back to the OneNote for a minute to save the time. OneNote is here. Just a minute. I hope everyone can see the OneNote. Okay. Students, pen is here. Net interest component 1.2. This is your pension interest. Can I say pension interest will reduce your retained earnings? Yes or no? It will increase the liability, but it will reduce your retained earnings. Is that clear to everyone? What this 1.2 is going to do? Please, student, reply on this 1.2. Logically, the double entry of 1.2 is retained earning debit and pension liability credit. The double entry of net interest component is your retained earning debit, pension liability credit. So, come here. We have used this, now I'm using this. Pension interest. Repeat, pension interest will reduce your will reduce your retained earnings and increases your pension liability. Of course, you will be solving it properly on MS Word. It's a small calculation you can solve on MS Word. Otherwise, you can solve a calculation part of Exhibit 2 you can show on the Excel as well. But I would say it's a very small part you can do on MS Word. So where is the retained earnings here? Yes. Can I say 1.2 will be deducted? From the retained earning, it will be deducted, but it will be added in the net defined pension liability is here. It will be positive. Let's check. We are doing. This is your pension interest. Now let me take you back to the OneNote again. A student on OneNote, you can see there's a service cost component 16 million. This service cost component 16 million will also reduce your pension, will reduce your retained earnings. Is that clear? This 16 million will reduce your retained earnings and will increase your pension liability. Service cost component. So this is, let me go back to the service cost component. We have used this, okay? Now, service cost component. Service component cost component is 16. That will reduce my retained earning, will increase my pension liability. I hope it is clear to everyone. Yes or no? Let's go back to OneNote again. Now, Ashwin, listen to me carefully. With this 4, they made a mistake. Examiner has taken this pension contribution 4 million as an expense. We have already decided logically this 4 million is not your expense. Repeat. By mistake, examiner has taken this 4 as an expense. Actually, this 4 is not your expense. What this 4 does actually, it increases plan asset, reduces pension liability. By mistake, they have taken this 4 as an expense. So obviously due to correction, when I'll be correcting it, it is not an expense. So this will increase your reserves. This pension contribution will increase your reserves. Is that clear? Next adjustment is relating to the pension service cost component, then pension contribution. Pension contribution is 4, which will increase my retained earning. Pension contribution is 4, which will increase my retained earning. Now, remeasurement component. Students, if you recall, in the remeasurement component, as far as I remember, there was a loss. There was a loss in remeasurement component, if I'm not wrong. That loss will actually reduces your OC and increases your liability. Pension contribution. So this is your remeasurement component. Students, remeasurement component will reduce OC. I will deduct 2.8 and that will increase your pension liability. Remeasurement component, let me repeat, is actuarial loss. So obviously this will reduce your OC, but it will actually increase what? Your liability. I think nothing else is left. So let's make one more column for the total. We have used this column. So let's do it revised SOFP. Okay. And oh no, made the mistake. This is another column. This is the one. Am I right? This is the one. Then we'll take this plus this plus this. Then we have got goodwill. Now I'll be writing here new total. Let me use a sum formula. Student revised total, we are getting 740. 745.61. Now let's come to the current assets. This plus this. Now here we'll get the total assets. So students, so far I hope it is clear to everyone. Yes or no, please reply. After total asset, students, share capital. Then OCE. Then retained earning is the one. After retained earning, we have oh no. What I've done? Something wrong. It was Control Z. Control Z is undo. Am I right? Then NCI. We'll take this. After NCI students, non-current liabilities, we have got only this pension deficit. Okay. Student, now listen to me carefully. Can I say, if you recall that 4 million, they have treated that by mistake as an expense. So due to correction, we have increased the retained earning, number one. Number two, the pension contribution actually reduces your pension liability. Is that clear? This pension contribution will actually reduce your pension liability. Because closing liability examiner has given us which is 40. So it cannot be more than 40. Is that clear, students? Pension contribution actually reduces your pension liability. So let's see. We have not taken the total of the equity here. Let me use a sum formula. This total equity. This plus. So student, you have to be a little bit careful in this. 2205.61. Let's see. I hope we are getting the same results. Yes or no, please reply, students. Let me check this one. Share capital is 135. OC is this. Retained earning is this. Then non-controlling interest, NCI. Student from NCI, we will not be only eliminating, just a minute. Here the correction is needed. Just a minute. Let me tell you what is the correction needed. A student from NCI, we have to deduct the complete NCI value. I have just taken the share of NCI. If you go towards the complete NCI value, removing from group, so NCI value, we have to actually eliminate this 56.39. So come here. NCI. With a negative sign. We have to eliminate the entire NCI value, not only the NCI share. Just a minute. This is what we are required to eliminate. So you can see this. Just by correcting this, everything is corrected automatically. We're getting total equity and liabilities 2154.61. Let's see the total assets. Yes, we're getting the same thing. So this is the benefit of a spreadsheet. If you, by chance, if you make any mistake, as soon as you are going to correct the value, if you have used the sum formula, or either you have just done the normal sum, it will be corrected automatically. So students, I hope now everyone is having a very good idea how to deal with this pre-populated SOFP. Where to do the working, what should be the presentation? Kindly reply. And you can see this on the PDF of this SOFP will not be available, student. I don't think so that ACCA gives us this much permission to save that. But whoever is going to watch this, of course, lecture will be able to see all the values. So students, I strongly believe everyone knows how to do the presentation, what is the presentation look like, plus the working everything. But don't worry, out of 5, this is the first question. We'll be doing 4 more questions on this CB platform so that you should be getting a 100% idea. So students, that is all about today's class. I would recommend, my suggestion to you is immediately after this class, if you have time, try to first of all do part in A and B on MS Word, do the drafting, read examiner's answer, and then do this question on ACCA CBE platform, which you have just seen. Even those they are right now here, the question which you have just discussed with me, or those they are watching this recording, I would suggest do this question immediately on the CBE platform, because sometimes what happens when you are looking at the teacher, okay, it looks very easy, but I would suggest at least do it right now so that you should get a really good idea. And once you will be doing around 5 to 6 questions, or I would say around 10 questions on this CB platform, automatically you will be generating speed. So students, that is all about today's class. I strongly believe that today's class should be very, very helpful for every one of you. Anything else, student, you want to ask before I end today's class? I'm just stopping the recording. And so that is all about today's class.